Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Prashant. With me, my colleagues Nigel and Surabhi. Guys, good morning.
Hi, good morning, Nigel. Good morning, Prashant. Smiles are wide. There's a spring in our step, and we know why. It's Friday, but also because the queues overnight not too bad.
Well, that's right. Trump says he's talking to various heads of various parts of the world. It reminds you when you were in college, right? Are you dating or not? You know, are they actually talking? They're not. One is saying yes, one is saying no.
I didn't meet him.
As dynamic as it is, right? We're meeting later today. We're meeting who?
This is a good one.
Getting
good one.
Friday.
I think you need these kind of analogies to describe what's going on, right? Because it's so bizarre.
Yeah.
One guy says I'm talking, the other says, well, I'm not talking.
And they says talking to who?
Talking to who? We'll play that soundbite out for you in case you've sort of missed the latest. But let me just quickly start from the top. So last night was good. I mean, S&P was up about 2, Nasdaq was up about 2.7%. So these are solid, strong changes that we saw in the US session. Now, confusing headlines with respect to China-US. Now, China-US, why are we concerned about China-US trade talks? Because the US is the number one economy, China is number 2. And, it matters for global growth. At 145% tariffs, China-US trade is halted. And people are expecting that if this does not get resolved, some kind of agreement at least, I mean, things will get worse, way worse, before they get better. They can get better. That's why US-China, what they do is important for global growth. And, of course, I mean, even for India in an indirect way, it matters. Now, yesterday, right, I mean, there were the Chinese Commerce Ministry official essentially said that any reports on developments in talks are groundless. So pretty clear. Now, President Trump overnight, was asked by a reporter about, the fact that China seems to be saying that, well, no talks are happening. And he said, and this is an exact quote, we've been meeting with China. There was a meeting this morning with China. Now, again, I mean, and that's essentially the confusing part. We'll await, and so the last statement was from President Trump, and it's possible that we hear something from China this morning at, over the next couple of hours. We'll see. But this remains the most important talking point this morning. Now, the 10-year yield lost about 7 basis points to about 4.31, and that was a sharp cut. You had the dollar index down about 0.4, 99.43, not very much by way of a change. You had Fed Governor Waller, who said that tariff and trade impact likely greatest on labor market, but will only show up in hard data in the second half of this year. There was another Fed official who weighed in and kind of indicated that, and typically a hawk, but basically said that June is a live meeting. But again, lots of caveats there. Who knows? I mean, it'll all depend on what the data comes through. Oil prices 0.5% higher, $66.5 a barrel is where Brent left off at. Now, South Korea and US have set a framework for a trade deal, which is essentially what Indian negotiators in the US are trying to do, which is broadly set up what they're going to talk about and negotiate, and what is on the table, what is not on the table, and what needs to be discussed. So South Korea and US seem to have done that for now, and trade talks will continue. Trump met with Norway's Prime Minister. They discussed Russia, Ukraine, but there was also a Bloomberg headline which said that the Norwegian sovereign fund will buy more US assets, US equities, etc. And we'll talk more about that as well. It's one of the largest sovereign funds. Just to tie in the levels here, so yesterday the market, of course, seeing about 0.33% cut. It was slightly sideways. We never got anywhere close to the hourly averages, which are support levels. So these are levels. 23,980 is where the 40 hourly exponential moving average is moved up to. And this is the first near-term, short-term support level. Upside level remains 24,546, which is 61.8% retracement of the entire fall. And, support for the Nifty Bank, 54,664, which is the 40 hourly exponential average. Resistance for the Nifty Bank at yesterday's high, day before yesterday's high, beg your pardon, 56,098 and then 56,631. So these are essentially numbers. GIFT Nifty will come up on your screen. And as I said, response from China, etc., will matter for how markets trade through the course of the day today and into the weekend as well, because headline risk really remains quite high. US-China very much right up there in terms of what markets are watching. Surabhi.
Absolutely. And for the time being, markets are feeling good, actually. Yeah. Asian markets are all up and about. And yesterday's Wall Street rally really helped matters as well. The fact that tech stocks took a flight, Nasdaq was soaring higher. Though all was not well. I mean, yesterday it was a lot about tech earnings, and some of that's playing out this morning as well. I'll just come back to Asia in a bit. Asia is the nice shade of green. But yesterday we had, a very different reaction to Intel and to Alphabet, specifically in after-hours trading. Because Alphabet's numbers are great. They have beaten on the top line and the bottom line as well. But for Intel, the numbers were good. Their guidance is very, very cautious. And in the commentary, the Intel CFO said that the chances of a recession in the US have increased, given all the trade uncertainty. And therefore, the guidance is lower than what the street had in mind. The Intel stock is down 5% in after hours. The Alphabet stock is up. So anyway, it's all about tech earnings. In Asia, now let's come to Asia. Japan, South Korea, Hong Kong, all markets are up and about because they've taken off from where Wall Street left things. And if you're talking about some of these trade talks, of course, we're still waiting and watching to see what the Chinese side says, because like Nigel also mentioned, the US is saying it's talking, it's progressing well. China is saying we're not talking at all. We will only talk once first you remove these, tariffs that have been levied. So let's see where that goes. In terms of South Korea, the trade negotiations have been underway in Washington. And yesterday, Scott Bessent actually said that they've been very successful. And these talks are moving faster than I thought, quote unquote. So that kind of is giving a bit of a positive leg up to sentiment as well on those negotiations. They're specifically looking to thrash out a deal on shipbuilding, which is very important for South Korea, obviously, and energy, which is really important for the US. So let's see how it goes. Talks will continue. Jameson Greer will take it forward now on the 15th and the 16th of May. Coming to the markets, like I'm saying, it's a broad shade of green all throughout, which will obviously help us start off on a very optimistic note as well. Yesterday, the market did, snap its 7-day winning streak. Bit of a pause yesterday. But the news flow was positive. The fund flow was positive. So no real problems in terms of the India pause yesterday. And given this backdrop, chances are that we'll start higher. We'll, in fact, look at the implied open again in just a bit. The fund flow picture, like I'm talking about, 8,000 crores of buying, 8,200 crores of buying coming in from foreign investors. I looked at the total monthly tally for April so far. If you look at the final figures from the depositories, the number is still negative. FPI flows in April are still down 11,000. But that negative number has been reducing at a very fast pace because of these kind of flows that have been surging through the cash markets. Domestic institutions were on the sidelines. They sold off a little bit of equity, worth about 500 crores. Earnings, and more earnings. We'll get you the details in a bit. SBI Life came out there. VNB growth and the VNB margin is way above expectations. So good showing over here. Tech Mahindra, weak as expected. The top line has fallen a little more than what the market had in mind, but the margin is intact. So let's see. And anyway, the markets moved ahead of the weak Q4 numbers for Tech Mahindra, for the tech sector overall. Axis Bank, not much problem. Margins are actually good. They've improved sequentially. Gross NPA picture is also looking better. So another good set of numbers from the large cap banking space. Let's watch out for this. And today we have a full tally. Reliance to start off with. Maruti, Dr. Lal, L&T Finance, Hindustan Zinc, and let's not forget Motilal Oswal. Capital market stocks obviously in great focus as well. So let's see, pretty busy with earnings, and the global backdrop is not too bad at all, Nigel.
Well, that's right. And yesterday was actually an inside day, which means the high and low of the previous trading session, the Nifty traded within that band. We broke that 7-session winning streak, though. We ended the series on a high, and the Nifty went home with gains of close to around 3% for the past series itself. Now, we kickstart a new series, which is the May series, and the question is, will it be sell in May and go away? Or are the bulls good for more? I think after the last two good series, maybe we should be bracing for more tepid kind of returns in this series itself. So let's see how that goes. The FI positioning in the cash market, well, it's far more optimistic, even in the futures and options space. So the FI's trend is more positive, but the clients are net short, and they are net short for the first time all the way since September, October 2024 or thereabouts. Let's get into further detail on that front then. If you're looking at the index futures, well, the FIs, they're net short to the tune of closer around 25,000 contracts. The clients as well are net short to closer around 21,000 contracts or thereabouts. And stock futures, both of them are net long. But this is after a while that we're seeing both of them are net short on the index. And let's rewind to the start of the October series. You know, you have the FIs at that point of time. Well, their short positioning was only around 20% or thereabouts. The clients, though, the last time they were net short was in October 2024. And this time around as well, they are net short on the index. What's different between October and currently is that at that point of time, the FI net shorts were missing in the system. This time around, you have the FIs that are net short. So a couple of points out here. Clients, net short for the first time all the way since the October series, while the difference between both the May series as well as October series at the start of it is that the net shorts from the FIs were missing. Now, that's the returns that we have seen. You know, the reason we're talking about the October series is because the last time the clients were net short, well, we did see a bit of a, downtick for the next few series. So I'm not saying it's going to happen out there, but the last time the clients were net short, we did see some kind of profit taking on the Nifty, though levels are very different and the euphoria levels as well were very different. So that's the positioning. Now, moving on to, the Nifty open interest. This time around, well, it's a little bit lighter than what we have seen. So if you pull up, the total open interest at the start of the series, well, it's a little bit lighter in comparison to what we saw in the past. Moving to the options data then, we have, a couple of strikes that were active. The 25,000 call, well, fairly active. Out here, there is some out-of-the-money call buying that we've seen. While at this particular strike, that's a 24,300 call, there is some writing that we have seen, 177 rupees or thereabouts. While on the put side as well, we have seen fair bit of action at around that 24,000 odd mark, 24,200 put, 24,100 put, which brings us to the levels. You'll still see this Nifty is in an uptrend till that 23,800 mark gets held out. However, we'll be breaking away once we get past the 24,500 odd mark. So that's a bit of a range down. Lower end of the range and the upper end of the range as well. The Nifty Bank, that holds the key. The 56,000 mark has been a bit of a crucial resistance level. We have almost visited that in the last few sessions, but we have not been able to conquer that. And remember, the RSI on the Nifty Bank, that's still holding above 70, which is technically a bit of an overbought zone. So this is the important mark. The stock that I'm tracking for today is Waaree Energies, because some of those shares that were locked up, including the promoter holding, well, that gets, comes off the lock-in period today. Stocks saw some profit taking today. It'll be the stock to watch today because the numbers were good. But because of that technical factor with the number of shares being able to trade go up, we'll have to keep an eye out on this stock.
Okay, all right, got it. Nigel, thanks for that. Overall, looking quite decent as we start off things this Friday. Here's an equity call, and this is actually a slightly cautious one coming in. It's from Vikas Jain of CLSA, who says that uncertainty on global trade is bringing back there is no alternative feeling, the TINA factor, back among global investors towards the Indian market due to its relatively low exposure to global trade. But the recent rally has taken both the Indian equity and bond markets back to stretch valuations. He says these, along with the potential for further EPS cuts, may limit upside. He says they have exited Hindalco, JSPL, SBI Life and Axis Bank. They've added SBI and Godrej Properties to the CLSA India focus portfolio. He says they right now prefer staples, energy, real estate, utilities and banks over IT, pharma, industrials and materials.